Hey everyone, and welcome back to the channel. If you're dreaming of buying your first home in the USA, this video is for you. It's one of the most exciting milestones in life. But let's be real, it can also be incredibly stressful and confusing. So many first-time buyers dive in headfirst and end up making some really expensive mistakes that can haunt them for years. But don't worry, I'm here to help you avoid all that. Today, we're going to break down the biggest, most common mistakes first-time home buyers make, so you can walk into this process feeling confident, prepared, and ready to make the best decision for your future. Let's get started. The very first mistake, and honestly, the one that catches most people off guard, is underestimating the true cost of homeownership. You've saved up for a down payment, you've got your pre-approval letter, and you think you're all set, but the list price is just the beginning. There are so many other expenses, often called hidden costs, that can add up fast. We're talking about closing costs, which can be anywhere from 2 to 5% of the home's purchase price. This includes things like loan origination fees, appraisal fees, title insurance, and attorney fees. For a $300,000 home, that could be an extra $6,000 to $15,000 you need to have ready in cash. And that's just to get the keys. Once you move in, the expenses continue. You've got property taxes, which vary wildly depending on your state and county. You'll need homeowner's insurance, which is non-negotiable if you have a mortgage. Then there's PMI, or private mortgage insurance. If you put down less than 20%, your lender will likely require you to pay this monthly fee until you build up enough equity. On top of all that, you have to budget for regular maintenance and unexpected repairs. The water heater could go out, the roof might leak, or an appliance could break down. A good rule of thumb is to set aside 1 to 3% of your home's value each year just for maintenance. For that same $300,000 home, that's another $3,000 to $9,000 a year. It's a lot to think about, I know. But going in with your eyes wide open about these costs is the key to avoiding financial stress down the road. All right, mistake number 2, and this one is a big one. Not shopping around for a mortgage. It's so easy to just go with the first lender that pre-approves you or the bank you've been with for years. It seems convenient, right? But this could cost you tens of thousands of dollars over the life of your loan. Lenders are all competing for your business, and they offer different interest rates, fees, and loan terms. Even a tiny difference in the interest rate, like 0.25%, can save you a huge amount of money. Imagine you get a mortgage for $300,000. A rate of 6.5% versus 6.25% might not sound like much, but over a 30-year loan, that small difference could save you over $17,000 in interest payments. So, how do you avoid this? Simple. Talk to at least 3 to 5 different lenders. This could include big national banks, local credit unions, and online mortgage brokers. Get a loan estimate from each one. This is a standardized form that makes it easy to compare offers side. Look at the interest rates, the annual percentage rates, or April, which includes fees, and the estimated closing costs. Don't be afraid to negotiate either. You can use one lender's offer as leverage to get a better deal from another. Taking a few extra hours to shop around is one of the highest return activities you can do when buying a home. It's your money, so make sure you're getting the best possible deal. Now for our third major pitfall. Falling in love with a house and not the numbers. This is the emotional side of home buying, and it's powerful. You walk into a house, you see the perfect kitchen, you imagine your family celebrating holidays there, and suddenly you're hooked. All logic goes out the window. You start thinking, we can make it work, even if the price is at the very top or even slightly above your budget. This is incredibly dangerous. Overextending yourself financially to get that dream house can turn the dream into a nightmare very quickly. You could end up house poor, where so much of your income goes toward your mortgage and home expenses that you have no money left for anything. Else no vacations, no savings, no fun. It adds a tremendous amount of stress to your life. The key here is to stay grounded. Before you even start looking at houses, you need to create a realistic budget that you are truly comfortable with. Not just the maximum amount the bank says you can borrow. Lenders often approve you for a much higher amount than what makes sense for your lifestyle. So, sit down, look at all your monthly expenses, your savings goals, and what you spend on hobbies and entertainment. Figure out a monthly housing payment that allows you to still live your life comfortably. Then, Stick to that number. No matter how perfect a house seems, if it's over your budget, you have to be disciplined enough to walk away. I promise you, another great house that you can actually afford will come along. Mistake number 4 is a classic, and it can be a catastrophic one. Skipping the home inspection. You might be in a competitive market where buyers are waiving inspections to make their offers more attractive. Or maybe the house looks brand new, and you think, what could possibly be wrong with it? Don't do it. A home inspection is your single best tool for understanding the true condition of the property you're about to buy. A licensed inspector will spend hours going through the home from top to bottom, checking the roof, foundation, plumbing, electrical systems, HVAC, and so much more. They are trained to spot problems that you would never notice. Their report can uncover major issues like a cracked foundation, a faulty electrical panel, or a roof that needs to be replaced immediately. These are problems that can cost tens of thousands of dollars to fix. Finding these things out before you buy gives you leverage. You can go back to the seller and negotiate for them to make the repairs, or ask for a credit to cover the cost. In the worst-case scenario, if the problems are too big, the inspection gives you a way out of the deal, so you do end up buying a money pit. The few $100s you spend on a thorough home inspection is some of the best money you will ever spend. It's an investment in your peace of mind and your financial security. Never, ever skip it. And that brings us to our final mistake: getting caught up in a bidding war and paying too much. In a hot real estate market, it's easy to get swept up in the frenzy. You find a house you love, you make an offer, and then your agent calls to say there are multiple other offers on the table. Your competitive instincts kick in. You want to win. So you increase your price. Then you increase it again. And before you know it, you've offered way more than the house is actually worth. This is a huge gamble. The first problem is the appraisal. Your lender will require an appraisal to ensure the house is worth the price you're paying. If the appraisal comes in lower than your offer, you have what's called an appraisal gap. You'll have to come up with the cash to cover that difference yourself, because the bank will only lend you money based on the appraised value. Coming up with an extra $10, $20, or even $50,000 in cash on short notice is impossible for most first-time buyers, even if you can cover the gap. You're starting your homeownership journey with negative equity, meaning you owe more than the house is worth. This makes it harder to sell in the future without losing money. To avoid this, you need to work with your real estate agent to understand the true market value of the home based on recent sales of similar properties, known as comps. Set a firm walkaway price for yourself before you even make an offer, and have the discipline to stick to it. It can be heartbreaking to lose a house you love, but it's far worse to win a bidding war and end up in a difficult financial situation for years to come. Patience is a virtue in real estate. So there you have it, the 5 biggest mistakes that first-time homebuyers make in the USA, from underestimating costs and not shopping for a mortgage. 2. Falling for a house over your budget, skipping inspections, and overpaying in a bidding war. Buying your first home is a massive step, but by being aware of these common pitfalls, you can navigate the process like a pro. Do your research, stick to your budget, and always protect yourself with an inspection. This journey is a marathon, not a sprint. Making smart, calculated decisions will set you up for a future of happy and financially secure homeownership. Thank you so much for watching. I hope you found this information helpful. If you did, please give this video a thumbs up, and don't forget to subscribe for more tips on real estate and personal finance. Have you bought your first home? Share your experience or any mistakes you learned from in the comments below. We can all learn from each other. Thanks again, and I'll see you in the next video.